Hey traders, TG Watkins here. It is November 15th when I'm recording this. Hope you guys are having a good weekend and surviving this market. It is a challenge out there. There are a lot of names that have been going down. The market is kind of neutral, and there have been now two really big dip buys on Fridays, and we're going to have to see if this actually persists into next week. Otherwise, I'm getting a little bit concerned. We could actually start seeing some more weakness going into the market next week, partly because we have some economic data and all that kind of happening. So let's kind of walk through the list here, and I'll tell you what I'm seeing out here. As far as the first item, government reopening. If you guys remember the last couple of videos that I was talking about, I said I think part of the issue is the government has been shut down for now excessively too long, and the liquidity, the Treasury General account, and all that kind of stuff is starting to cause problems inside the market. And I said, first, we should look to see how the market responds when the government starts to reopen. And last Friday, we got news that the government was, that the politicians were going to start talking and negotiating, and that likely the government was going to start reopening. So we got a big move on Friday. More news about the government reopen happened over the weekend, so we got a nice move to the upside. Great. And then basically, as the government actually reopened is when the market then turned around and continued going down. And so far, I have not seen any change in strength for tickers or anything else like that underneath. A lot of stocks are still down quite a bit. They do seem like they're getting extended or extreme to the downside, stretched to the downside, but that doesn't mean that they're ready to buy. That was one of the most common themes that I was talking about inside of the Moxie room for the last few days. Is I had a lot of people ask me like, hey, is this a good place to buy? Is this cheap? Is this on sale? Is this the dip buy? And I said, it might be. I can always say maybe, but nothing's turned. There hasn't been any change. Like the market hasn't suddenly strengthened. We don't have any catalyst. Nothing's happened. These names are still down. Like Facebook hasn't turned around, or Meta hasn't turned around. Like we haven't seen the turnaround. So we don't need to go buy the dip because it could keep dipping. And so we don't really have any clues yet that a low is in. And so what I was saying last week in the last video before that was, let's see what happens when the government reopens. We definitely had a strong move on the idea of the government reopening, but now that the government's actually open, we're still not seeing any change, and therefore this isn't so much about the government reopening situation, it's now about other things. And part of those other things, if we look at this, could be about the economic data, the fact that the market has been flying blind for a while. And they're maybe kind of concerned about what's going on out there, that jobs and unemployment and all this, they're hearing like Verizon had 15,000 job cuts, and we're seeing a lot of layoffs, and people are getting a little bit worried about that, or at least the market is getting worried about that. We do have the jobs report is going to be coming out Thursday next week. And I'm a little bit wondering if we are either going to, one, be weak into that, or two, if that's going to exacerbate the weakness, because we are going to start getting some of this data coming out. And if the data is not good, then the market's going to be really kind of concerned about it, and that could continue being some problems. At some point, I would imagine that the market's going to be coming down so much that we're actually going to get into an oversold condition, and we could start seeing a turnaround from that. But I just don't see that yet. Maybe it happens next week. We're going to have to keep watching. But right now, it's kind of like you got to be careful out there. And I've started putting on some short positions. We actually shorted GDX and made 17% in like 1 or 2 days. And that was good. But other than that, it's pretty tough. The December rate cuts. It is now about a 50-50 chance that they are going to cut rates. We don't know where they're going to stand. We know Jerome Powell is concerned about jobs, so he would cut. However, some other of the Fed heads are concerned about inflation, so they don't want to cut. And I think that was another thing. Some news came out towards the end of the week about them saying, hey, I don't think we need rate cuts and we should hold firm and where we are, and the market didn't really like that. We did get that gap down on Friday. I think it came right into a double bottom, so we actually took a put credit spread on this. So we opened with a gap down like that, an excessive gap down, into a double bottom, and it rallied back up, and we put on a put credit spread. We made about 50% in just a few minutes on that, so that was nice. And then where's the seasonality, right? All the statistics say that we should actually be, this is the strongest time of the year, except for maybe this time. And that's why seasonality it rhymes. It's not always something that we can totally rely on. And this is one of those situations where the strongest time of the year is not saving us yet. Maybe we will get a rally sometime in the end of the year, but we are not seeing it here or yet. And if we look at the SPX, so if we kind of get into some of the tickers, the SPX really hasn't done too much. For all that it's been moving around, it is still basically sideways. In one hand, that's good. On another hand, it's kind of been masking what's actually been happening. I think there has been a lot of weakness underneath the surface, but it's not manifesting itself up here. So there is some rotation. We have healthcare up, XLV is up, but underneath the surface, the small caps have really been getting hit very, very hard, along with Bitcoin. And so that kind of tells me that this is a risk off time of the market, and you got to go out there and either get out of the market or you need to find some safe havens because the risk is definitely coming off. Now, and if we zoom out, we can look at the SPX here, and again, not much has happened. We're really still only at the weekly 8 EMA. My concern is if the weakness that we are seeing in the market, and yes, there's rotation, but if we start getting a little bit more weakness that kind of works its way up the food chain, my next target is if we cannot hold the weekly 8, we could come down to the weekly 21, which is about 6,500. I don't know if it's a good thing or a bad thing. Maybe if we get down there, maybe that'll actually be where support is found, and then maybe the market can start moving back up. That would be about a 5 to 6% correction for the top. That would be a reasonable pullback, and yeah, we'll just kind of have to see. We are managing to hold the daily 50, but what if we don't? If we can break below the daily 50, you can see 6,500 is this trend line. So that is certainly a possibility. And the other thing I'm looking at as far as Friday, I actually put on a few short positions Friday going into the weekend, because what I was concerned about, despite the Friday bounce, is we are still exactly right here underneath a downtrending hourly 50, and the Moxie Indicator is below 0. And you can see here, we basically bear flagged right into the underside of a 15-minute 50. And so I'm not super confident that this wants to go up right now, because I just don't see anything that is changing the narrative. And so I think we are at risk of seeing some more downside as the weakness starts to work its way up the food chain. It started with Bitcoin, started with small caps, and kind of keeps working its way higher. Now, if we look at the RSP, again, we had a really big bounce. This was all based on the idea of the government reopening, but then it got hit pretty hard. Now, I shorted the market with this because I could tell that this was very extended and we were likely to pull back. So we did take a call credit spread. I didn't make as much as I could have, but at least the trade was right. I nailed it as far as the trade, didn't hang on to it long enough, but we made money on it. And if we look at the the RSP here, once again, it's not terrible. The indices are most of the indices are really kind of masking what's going on underneath the surface. I'll show you a couple more where you can see what's happening, but you look at the equal weight and it's really not that bad, which kind of tells me that we're getting a lot of rotation. So somewhere out there, there is either strength or the market's just kind of hanging out, waiting to see what's going on. And that's what's happening here. Is at least what I keep trying to say is the froth has been taken out. I think that was also the issue. The whole AI trade, we go robotics, crypto, AI, data centers, they're all the ones that are getting hit pretty hard. But not everything is going down, which is why even the RSP is really just mostly sideways. So I don't really have much to say here other than we're day trading it, we're short-term trading it. There is no trend, and I just got to see if this market's actually going to go lower or not. So there's the RSP. If you look at the IWM, we can see that there is weakness here. Clearly, this thing has been breaking down quite a bit. It definitely lost the daily 50. And this is kind of where I've been saying small caps are getting hit, and the froth is coming out of the market. We've since the tariff tantrum lows, it's been the very speculative part of the market that has been running a lot. And IWM is representative of that. You can see IWM is all the way back down to the weekly 21. But again, maybe the froth has come out. And if you compare this to the RSP is mostly sideways, but also at the weekly 21. So there's some thoughts there. And then if you look at the SMH, this is still where if the market is still feeling too elevated, there is still room for this to come down if it wanted to. This is kind of where I'm saying that if the weakness starts to work its way up the food chain, then we could start seeing the SPX come down. We could see the SMH come down. It is still at the weekly 8. I don't know how much lower it's going to go. One benefit for now is that we are at the daily 50. Usually that is an area of support, which we could see before. And you can see I've got this diagonal trend line that price is hanging on to as well. So I think over the next few days, and remember we have some economic data that's coming out next week, so either that's going to be good or bad. We need to kind of continue to watch this and see if price is going to continue to break down and see if price is going to continue to break down. Right now, I see no clues. Price is still underneath all the moving averages, and I don't see anything that says that we're ready to go up. So We might go down a little, we might go down a lot, I don't know, but all I can tell you is I don't see that these things want to go up yet. And if we look at FNGS, these are the FANG stocks, and you can see it's kind of the same story. It is below the daily 50. There is kind of a trend line here, but you're still underneath here. The Moxie indicator is not telling us anything, and you're still running into the moving averages here. So there's nothing to really work with here. It is just barely sitting on the 8. So again, it's at least at some support. It could go to the 21 if these things wanted to move lower, or we just continue to kind of flag sideways for a little bit. It's a little bit hard to see where the downside target would be, but all I'm saying is there's really not much strength to the upside yet. So there's really no reason to think, oh, I should buy here. So that's why we need to just hold off until we can really see something change, because there's nothing here that really says let's go long yet. If we look at ARKK, the only good thing I'm kind of looking in through here is that perhaps these things are getting oversold, stretched, and coming down into support, and they have worked off their overbought condition, or the froth, as I keep saying. That is the only kind of good thing that I can see in through here is, again, into the weekly 21, a little bit further. It's no longer extended. It's no longer overbought. And I think that this is kind of what the market needs if we are to ever go back up, is we kind of have to burn everything down in order to start over. Like, we've got to really wring people out. We got to, shake out the weak hands. We've got to really get this kind of smashed in order to be able to go higher. And that doesn't mean we're ready to go buy yet, but it just means that that's kind of what's happening. So that's where we can see that with ARKK. And I wanted to show you FFTY. This is the IBD50. And as you can see that the IBD50 is also a kind of very risk-on type speculative stuff area there, technology and all that kind of stuff. And you can see we're very, very extended. I covered this one about 2 weeks ago in the weekly video. And, I think that actually maybe it was last week where I said it came down to the weekly 21. Well, we're even lower. And you can see here, we are down to the monthly 10. There was a pretty big gap here leading up to it, and at least now you can see we're back down to support. So again, the speculative areas of the market have been getting hit really hard, and that's the difference between what you're seeing with the SPX all the way down to FFTY or ARKK, and they are now getting to where I would start to say they're looking excessive to the downside. Doesn't mean they're ready to go up. They can also kind of find a level while the rest of the market starts to come down, and that's what we have to see. So not quite ready to go long on anything, but they are getting excessive to the downside, but they could go further a little more. Now, where's the strength? XLV. We've been seeing this. It's been taken off. This is kind of what I would have wanted to have seen from news about the government reopening. I think that part of this, because remember the government shutdown was really had a lot of issues with the healthcare situation and healthcare stocks. And so now that government's reopened, look, healthcare went up. And so I think that is one response from the government reopening. I would have liked to have seen this kind of character from the rest of the market, but we're not. So it seems like there's more going on than just the government shutdown situation. Now, the only thing to kind of say here is that perhaps this is a little extended. So even though it has been strong and it's one of the leaders, I don't think it's at a buyable area. It's a little extended, so I wouldn't just go pile in here. I think you need to be careful about this could pull back too, because I think it's basically gone vertical. Okay, then let's take a look at breadth. And the interesting thing about breadth is that it hasn't really moved. This is something I've been talking to the Moxie traders about, and it's incredible to see that this has really just been going sideways, even though underneath the surface, there are a lot of names that have been taken down. So this kind of tells me that I think that there's rotation going on. They are not throwing out the baby with the bathwater. We haven't seen breadth get down to 10 or 20%, kind of like we saw back here. And so in one sense, I'm happy to see this. This means like the market's not totally falling apart, but boy, the kind of stuff that I like to trade and the stuff that I think has been fun and exciting and strong over the last few months, those are definitely getting hit, and money is finding a home somewhere else. We just kind of have to figure out where else is that money going, because this is showing us that it's actually, all in all, it's not that bad. It's just that there are a lot of areas that are bad. So I found that to be really, really interesting as far as that little bit. Now, here's another little tricky spot. If we look at the VIX and the UVIX, originally I was looking at this move as kind of a counter trend move. And then when the government started to reopen, you could see here, it came back down. I'm like, okay, that's good. I'm happy to see this. VIX got knocked down. Market's going up. Great. Now we just need to see if we can get upside follow through from the market and downside follow through from the VIX. Unfortunately, it perfectly held the daily 50. And you can see now we're back up again. And what I'm concerned about is that this might actually be a bull flag, and this could actually start going higher, which is why what I pointed out with the SPX. I said the SPX might be running into its hourly 50 and might actually go lower next week. So we took some action. We're actually long some volatility. We are short the market, and we're short a couple other names. And so, either we're taking advantage of that or we're hedging our portfolio, however you want to describe it. But we are taking some ideas to the downside, which I think is the right direction for next week. And then if we look at the UVIX, there's not too much to see here on the daily chart, but it's really this hourly chart that has my attention. This is usually a pretty good setup. You can see that we have a double bottom, positive divergence, Moxie price trigger, and we are sitting right there on the hourly 50. If this were a stock, I'd be long this stock. So I did something about this, and I am concerned that this is looking very, very ripe and ready to go up, and that means market's going down. And so, we're taking advantage. We're going to see if we can take advantage of that. Okay, so let's see what else on the list here. We got a couple other tickers down there. Talk about some of the bad, the good, and then the middle. So let's talk about Ethereum. Now we know Bitcoin, crypto, they've all been going down. It's certainly been happening. Now the only thing I can really kind of point out with Ethereum is that typically I view the monthly 10 and the weekly 50 as support. Doesn't mean it has to hold. It could go lower, but I'm looking at that and thinking, I wonder how much further this thing is going to go. It certainly could go further, but I do want to be aware that it is at some potential areas of support. You could also see that here at the 200, but right now I have no signs, nothing that says right now is ready to buy. So it could certainly go lower. I'm just pointing out areas of potential support. And then if we look at, let me just go over to GBTC, or I guess I could do Bitcoin, because the important thing with Bitcoin that a lot of people are talking about out there is that Bitcoin has now broken below 100,000. You can see there was a little bit of a shelf right there, and then it broke below. And John Carter, Simply Trading, John Carter he is targeting 80,000. Now, what I've been saying when I'm on the mic is, my goodness, I hope that Bitcoin does not go to 80,000, because if Bitcoin's going to 80,000, that means the rest of the market has much lower to go as well, because Bitcoin's not going to go up when market's going down, Bitcoin's going down, and if the market goes up, it's unlikely Bitcoin's going to go down. So I figure that Bitcoin and the market are going to go with each other, just a little bit further. And what that tells me is, if Bitcoin's going to 80,000, we've got some more downside in the market, which that's why I'm saying I'm a little bit concerned and cautious, and I'm not thrilled that Bitcoin might go to 80,000, but if it does, then you need to be prepared for it, and it certainly could be a thing. I wish it wasn't, but right now it looks pretty bad. So yeah, there's no green, there's no good stuff here. There's nothing positive to say here. And so let's see if 80,000 actually happens. I wish it wouldn't, but that's where it's going to go. Then just be okay about it and take precautions. Okay, if we look at APLD, just to show you guys some of what has been getting hit out here, it's been the data centers, it's been AI, it's been the semiconductors, it's been tech, which not too surprising. We know these things were getting really, really crazy. I'm not going to say necessarily that the bubble has been popped. All I'm going to say is I think these were some very, very excessive moves. And so far, these pullbacks are somewhat reasonable. I mean, you look at the moves that they had, and they just became too much. They're too frothy. They're too crazy. And right now, APLD, it's really only back to its weekly 21. It could go lower, of course, but this isn't like bubble pop territory yet. We won't know that for a little bit further until we actually figure out if this thing completely, if this goes back to $10, okay, maybe the bubble got popped. Right now, this is just a really, really big pullback, because these things also had really, really big moves to the upside, and they were very, very excessive, because you can see how far price was from the moving averages. TSSI, we were in this and unfortunately got stopped out pretty quickly. Actually, maybe I just got myself out. It had a kind of a fake out move. You can see here how it broke out, and then you can see it just completely rolled over. So we were not in this for earnings, and you can see it dropped, I think, another 40% on earnings. But yeah, these things are not looking great. Big move up and then came down here, and they're breaking lower. So they're really, really hitting the kind of data center AI, some of that stuff. Now, it's not all terrible. Like I said, there are still some names that are doing well, and that's how the market is able to stay up. MODG, which is actually Topgolf, if you guys are familiar with it, broke out. And I've actually been talking about this for a few weeks. You can see the X of where I started talking about it. I do know we have quite a few people in the Moxie room who are trading this, and they're benefiting from it. And you can actually see there's a lot of volume on that breakout. So MODG is actually looking really, really great. How about DDOG? This one is also one that we did really well. We got something like 35% or something on the leverage ETF of DDOG. We bought it here, we sold half there, and we got some cushion. It's obviously looking like a good strong stock, so I'm giving it some room to kind of work, and we'll just see what it wants to do, but I'm pretty happy with that name so far. And then just to show you some other examples, you can see Frog. We do not have a position in this, mostly because it moved up on earnings, and I did not have a position going into this. I don't want to chase it, just kind of like DDOG, like these things are excessive. But it is something to keep on your list because for all the names that are going down, there obviously are names that are going up. That's why the market is so neutral. And just be aware of these things. I don't know if these are buyable right now, but I think someday they will be. And if they come down and give you a better price, then you want to make sure that these are on your list. So Frog is being a little bit froggy, which is cool. Okay, then if we look at Tesla, it was kind of a buy the rumor, sell the news situation with the Elon pay package and their Optimus meeting and all that kind of stuff. I had some options on this. I got out of all of my options right before the pay package vote, mostly because the Moxie Indicator, you can see here, the Moxie Indicator was not looking good. And I was concerned that Tesla was a little too elevated. I do still have my stock, but I completely got out of my options. I'm very happy about that. And then you can see here, price broke the daily 50 and then continued to press lower. Once again, it's reasonable because you can see that going into this, it was very extended and it was right here at a double top and it just couldn't break through the double top while this market is starting to become weak. Since then, it's really only pulled back to the weekly 21. It could go lower, but this is all fairly normal stuff right now. We just kind of have to let the market do its thing and figure out where these things want to come down and then eventually repair themselves. So hopefully we can go higher sometime in the future. We just need more time. I think that's really what we're looking at. I can't say that they're bearish because they're still technically in uptrends. They just didn't explode to the upside. They're not breaking out. They're actually pulling back. So you just gotta back off a little bit, let the market do its thing, and see what else is going to be next into the future. But there's nothing really to do with this yet, as far as a long. And then Hood, we've been seeing some weakness in this as well. I think it's reasonable. Market's kind of weak, all that kind of stuff. But once again, look at the move that these things had. Like Hood is wildly high. This has been a huge move. And if anything, it probably just needs to digest it. It's really just coming down to its weekly 21 for now. It is coming back into its previous level for now. There could be some more downside, sure, but also what if it just needs to pull back a little bit and then go sideways for a little bit? These things can rest and can chill for a while. For example, let me just show you NVIDIA before I get going. You look back here. Look how long NVIDIA went sideways here, NVIDIA pulled back here, NVIDIA pulled back here. We all know this thing, okay, fine. But then look, we're back up. So I think in some cases, yes, some things are getting really, really hammered. In other cases, these are kind of just normal pullbacks for now. And of course, it kind of feels bad underneath the surface. But I think we need to be aware of kind of the overall larger picture. The SPX is not bearish. Really, the IWM is not bearish. They're just pulling back. Tesla is just pulling back. A lot of these things are just not bearish. They just went from being really, really high to now trying to kind of put that genie back in the lamp and reprice everything and just kind of tamp everything down a little bit. So I think if you can just keep your powder dry, stay safe out there, and then we just let it all pass, and maybe the market needs to see a little bit more economic news and kind of see where it wants to go. And then we get some Jerome Powell information about rate cuts and all that kind of stuff. Then we can get some more visuals about where the market wants to go, and then we can kind of figure things out. So stay a little bit nimble out there, day trade, see what you can do, stay safe, and remember simplertrading.com/Moxie. We'll see you there. Thanks, guys.